where speculators get punched in the face, and the jobs report kills every trader's theory. The CPI and midterm elections will put markets to the test this week to determine if they will get the rally that they deserve. All right, ladies and gentlemen, I hope you had a wonderful weekend. I thought I'd throw in a little bit of the theatrics there because we are going to focus. I got a little bit of a breakdown for the midterms this week. Not only are we going to get the CPI on Thursday, but now the midterm elections, this might very well be a pivot point for the market. So this was the market on Friday. You had the jobs report, and it was an absolute roller coaster. Even though the data was good, it threw us off guard for a little bit, but literally it crushed everybody's theory out there. So we have a lot that we're going to go over, but I got a nice simple breakdown and then a little bit about what is going to happen this week and what to watch for. Again, as we get that CPI, that will be our next catalyst, and then we're going to see where we go from there. So drop your thumbs up on the video, make sure you're subscribed, and this was Friday, and fill out the random play. I need a random play right now, all of that, but let's get right to it, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, ladies and gentlemen, before we get into anything, what I want you to see is a couple of things. First one is where the market is. This is the SPY right now, the S&P 500. And as you see, this level where we closed, this was a level that we hung out for a lot of time. The last time we hit lows, and then things got better than worse, then better than worse, and then you had the most hated rally, and then everything went crazy. But it's a key level. We got to watch out from there. And then let's go back to some of those pretty pictures I threw in it on the intro. But essentially, after the midterms, as we get into this quarter or any presidential year, this is seasonally the most bullish time. And then as you can see here, more often than not, the midterm elections have caused a positive reaction within 1, 2, 3 months, and then even 12 months later. The last time in the short term, it was really bad, 2018, it was not good. So keep all of this in mind, but actually it's going to make sense as we get into the keys. So let's start with it right off the bat, man. CPI on Thursday. This is going to be one of the bigger drivers, but now as we move forward throughout the week, pretty much there's not going to be anything else except for the midterms and then everything that happened last week. Don't forget all of the global events. So remember the Chinese rumors on Friday about the reopening. You actually got it twice last week, and it even caused these big reactions. Literally, the Hang Seng, this was one of the best days it's had in almost 10 years. So this was really big, and even the Chinese currency, what we've noticed over the last times we had these rallies, it was bringing the currency down, and then this was having a negative impact on the dollar, which was actually positive for the market. So keep all of this in mind, because until we get the data on Thursday, it's going to be all about the midterms, and then wherever China goes, the euro, the pound, the yen, and all of that, even the bonds. But now let's get to kind of the meat of the bone. I'm sure as the week progresses, we're going to be able to go over a lot of different things, but I want you prepared for the midterms here, and we've talked about how a lot of stocks will have effects. So I'm going to go over a couple of the industries here and a little bit of fun facts. So this is what I've gotten from research. You could make your own opinions. Even then, I'm going to use this as a benchmark of what the market is pricing in. Some things may be a little bit off, but we will see how it progresses. But to start with the wheat stocks here, this is the major key this week. What you want to be looking for, there's going to be Maryland, Arkansas, Missouri, North Dakota, and South Dakota. These are the 5 states that are weighing to approve adult legalization, and the way the market's going to be looking at it, if 4 out of 5 of those states get approval, that will be a positive for the wheat stocks. Now, there's Maryland, and for some reason, I think it's just kind of where they stand with all of it, but there was one analyst comment saying that if Maryland fails to get approval for this, even if the other ones get it, that will have a negative bearing on all of the weed stocks. So keep this in mind. That is the first key. Now, then moving to healthcare, watch for any legislation that will impact drug pricing. Pretty much how the market's going to be looking at all this is that Republicans are seen as more favorable to the industry than Democrats. And then if Democrats get a majority, or again, if you see votes swing in that favor, then there might be a negative one on the healthcare companies. But this one's a little obscure, but a lot of people are saying watch Pfizer, AbbVie, Eli Lilly, all of these companies during the midterms. And as we start to get results, these will be the ones that have a big effect. So watch out for that. Then for the China stocks, this one gets very interesting because essentially if you see a Republican sweep and there's a lot of Republican winners, this is going to be more bearish for the China stocks. And then if the Democrats even get a majority, or pretty much no matter how they perform, since Biden has already been pushing a lot of the delist China names, that has actually kind of already been bearish in general. It's looking like it would be a net neutral if you start to see the Democrats come ahead. So there is that. And then for the clean power, nothing really with Republicans. Again, you'll see when we get even to energy in general, but the more Democratic wins, the more bullish for any clean energy stocks. Again, like Enphase Energy or even First Solar, I think was on one of those lists, but that is looking good for them. And then energy in general, it's actually looking neutral. So no analysts have really said Republican or Democratic, majorities or anything. It's not going to really change much with what we got with all of the energy, not clean energy, but like Exxon and all of those names. So that one was interesting, but watch out for that. And then for big tech, people are saying to watch out for R&D tax cuts, and that would be a benefit that they would get, the tech stocks, if Republicans won. And then there's already the antitrust legislation on the Democratic side, so we will see how it plays out. But to sum it up, and according to Bloomberg and one of their sources, it is saying that the options market is pricing in as much as a 0.7% gain on a Republican win and a 3.3% drop if the Democrats somehow hold on to Congress. So the point is, and what I want you to see from all this, is that throughout this week, up until the data, as you start to get results, there's all these various industries that will get a little bit of effect. And then on the broad macro scale, once we get outside of the midterms, it is going to be clear sailing for the rest of the year. So I hope you're ready. But let us get into the plays. So, right off the bat, ladies and gentlemen, I got 3 different stacks that I'm looking at coming into tomorrow. A lot of these plays I actually made on Friday, and even on Friday, we had a bunch of day trades. It was actually crazy. If you guys were watching, it was an absolutely wild day. Oh, wow, futures have already gapped down. Oh, there you go. So, that's even the futures right now. Oh, man, that's crazy. But it was wild even throughout the day. You'll even see I actually got caught in a short in the morning. Where was it? It was at like 5 in the morning. Yeah, I went short on a play. Thankfully, they rejected one of my other ones. But the whole idea was, man, I got caught in the short. The market bounced, and by open, I reopened another NQ. I made a bunch of flips, and even by the end of the day, we were actually able to close positive. And now I'm holding a lot of the short plays that we had coming into all of the event. But the whole idea was, man, Friday was an absolute mess, and now this week with all these events and everything else, that is going to be a big driver. So let's get to the plays. I'll start with the first one, and you'll see how this mixes in with one of the other plays that I have. But I went with Apple. I grabbed about 50 shares at 138.95, and my idea was, hey, they've been getting a lot of bad news. It's been getting crushed, and then I already was going after all of these short plays. I wanted to get a little bit of upside, and then at this level, I didn't really see it as a problem because anytime here on the dip buy, it's been good. But if it does flush, it will get clapped. And my whole idea is we're holding some of the other shorts as well. And then if you guys even remember the Qualcomm play, my other idea here is I'm also short on the Qualcomm. I'm already getting crushed on it a little bit. Pretty much if Qualcomm does good, then Apple should probably do good as well. Otherwise, they should be able to hedge each other a little bit. But I am much, much bigger on Qualcomm. But that is going to be play number 1 there with Apple. Then play number 2 now, /ZN, and this one is going to be very interesting. So I'm already short on this one. I took this last week, literally right after Powell, and hearing the terminal rate comment again, I mean, he even said it himself about rates going higher, and that's why we still need to be watching /ZQZ22 is now called Zaza. That's the easy way to say it. Okay, so anyways, but /ZN, the bond play, this one is going to be risky. I'm not as confident in it, and it's just the nature of where it is right now, but I am still holding short. Just expect this play to kind of be like the pound play, where it's going to be extremely volatile. You will have a lot of opportunities, but you never know what's going to happen on the macro front, and it's going to be messy. But I really like it in the sense that it might hit a new regime here on the bonds, and pretty much people are talking about a 5% on the 10-year. Right now, we're around like 4.5 or 4.25 to 4.5, but after Fed Powell and even coming into this year, and even just depending on how this next couple of months goes, even the midterms, people are talking about a 5% 10-year. So match that up with the data and CPI this week. I think bonds are definitely going to be an area to watch. So watch out for that. That is play number 2. I am still in that. And then finally, play number 3 and 4. These were the last final pickups that I grabbed on Friday. I grabbed 150 shares of Meta. Remember, we were holding some after earnings. And then I grabbed, I believe, 100 shares of Netflix as well. And the reason is, like I'm saying, I have my MYM. I'm even short on the pound, and we have a lot of other downside plays, even Qualcomm, and I think there's one more, but we'll have to double check. But the whole idea here with Meta and Netflix, I'm using these as the upside simply because one of them is an outperformer to the upside. That is Netflix. They've been doing very, very well. We know their earnings. They performed, and now they've kind of given some up. They're actually at kind of a fill the gap moment, and that's the only part I don't like. Even with Apple, any of the upside plays, this is the negativity right now because they're kind of getting back to some of these in-between levels where if they don't bounce from here, you know, downside would be pretty bad. So hopefully I'm able to make more on my other downside positions, but the idea is Netflix is the one that did good, so we know that they are an outperformer to the upside. And then for Meta, they're the one that has already been beaten like a stick. So if the overall market sells off, you've seen this effect many, many times where the name that has already been beaten down kind of just stays pinned or would even go up. So this is my logic with them, but I'm going to keep this throughout. Again, whether we get upside or downside in the market, hopefully we could balance these plays out with the other ones, but these are going to be the areas and pockets that I'm going to be focusing on. Again, everything from tech and chips all the way down to the bonds and volatility, then Meta and Netflix because their recent performance, and then everything else for the midterms because that's what we're going to get this week. So that is everything as far as what I'm holding and everything else. Get into some of the plays here. Again, I still have the ES options, holding that one negative. Again, $1,500 on that. The MYM still down 7,800. I mean, it's better than the 9,000, but even from last week, it didn't do as good. But remember, this is some of the downside positioning that we have. There's the Apple after last week, or even Friday, only a $40 loss. My Meta still down $1,100, but we were down about $1,000 leading into it just from the post-earnings play. So there's that. The MSOS, just I keep forgetting about this one, but down $43. Remember, this is the wheat stock play that we're going to be holding into the midterms pretty much after we get results, or I'm going to be using that 4 out of 5 state metric to kind of determine or make my judgment. After we get those results, I'll either sell out or ride it through if it looks like it will be a positive reaction. And then there's the Netflix down 389 on that one. I was down a lot more, but this one's a little bit bigger, so I'm hoping this will balance it to the upside. Then the Qualcomm, I'm down 1,500. That's because I'm getting totally clobbered by the options. I think I'm only down like $200 on the shares, and then there's still the 6B. That's the pound play. It bounced a lot. Remember, I was only down 900, and then after that China move and the China rumor, that bounced some things up there. So still in all of those. I even closed out of the yen. Remember, we had upside China play from last week. I closed out like $300 on a very small position, so that was good. But gonna be writing out all of these. We're still even in the UN, the UME. Oh no. Anyway, it'll be a good week. But overall, gonna be watching the politics, balancing out these plays, using the market volatility to balance. Hopefully, be able to drop some things off and do some good. But I think it's gonna be exciting, and I hope you're ready. But That is your watch list, ladies and gentlemen. Make sure hyper healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, real belief will bring real change, baby. Don't keep making the same mistakes. Use this volatility to take advantage of it and make some money. Don't let it take advantage of you and get you out of the game, baby. Stay focused. This week is going to provide a lot. And after we get the events, baby, it's going to be a clear runway all the way till the end of the year. And you're made for it, Chad. So I hope you're ready. I'll see you in the morning. And I love you. That's it. I'm not even that awkward now. And again, you can't see me. I hope you focus, baby. It's focus time. It's game time, baby. Hey, I don't know. What do you think about the intro? I think I might have to do that on every intro. That took so much time, though. I had way too much fun with In the World. Wait, okay, I got to go. Horn.